Hello. Nothing motivates like a deadline, even a self-imposed one. The Trump administration's self-imposed 4th of July deadline to pass the One Big Beautiful Bill Act, which everybody is abbreviating OBBB, 3 Bs, it seemed unlikely until some 11th hour wheeling and dealing. It's now the law of the land when it comes to taxes. But just how big a difference are you likely to see for your taxes? Now, I want to start off with a few disclaimers. This is far from an exhaustive list. I'm just trying to hit the highlights that will impact the most people. I'm happy to talk about the new provisions for things like student loans and the slight drop in rates for those in the very highest tax bracket individually, or if there's enough interest in a separate video. Also, I gathered this information from what I feel are reliable sources. Since they're in general agreement, I feel comfortable that what I'm saying is true, but you should discuss your specific situation with your tax advisor. So let's start with what's basically the same. The 2017 levels for tax brackets and standard deductions for those under the age of 65 both basically stay the same for 2026 and beyond. And when I say 2026, I mean the 2026 tax year, so taxes you would pay in April of 2027. Other than that very top end that I mentioned, the rates and the deductions are basically the same. There are slight tweaks to both, but the changes are so small, they're unlikely to go noticed by most taxpayers. For those 65 and older, there is an additional $6,000 deduction per taxpayer available, and that begins actually in the 2025 tax year. It's subject to some income limits, and so while this isn't apples to apples, this is what the administration is referencing when they talk about no taxes on Social Security. Now, you don't have to be receiving Social Security already to get this $6,000 credit. Anyone 65 or older is eligible, again, depending on income limitations. To me, the provision that's most likely to impact taxpayers in a substantial way is the increase in the deduction for state and local taxes, and that's better known as SALT. Since 2017, the SALT deduction, which includes property taxes, has been capped at $10,000 per year. Beginning with this year's taxes, so 2025 taxes, that cap has been raised to $40,000, again, subject to income limitations. And that is going to increase 1% a year through 2029 when this provision will expire. At that point, it will revert to a $10,000 per year cap, so we're likely to see another battle in Congress in a few years about what to do with the SALT cap. For the charitably minded, beginning in 2026, there are some differences based on how you file. For itemizers, charitable gifts that are 0.5% or less of your adjusted gross income are no longer deductible. That 0.5% number acts as a floor or a hurdle that you have to get over before you can start deducting charitable gifts. The upper limits of deductibility, and those are all subject based on what your income is and how you're giving that money to charity, those upper limits all remain the same. For those that are under the minimum standard deduction, in 2026 you can write off $1,000 if you're single or $2,000 if you're married filing jointly of charitable gifts. So now let's talk about some of the provisions that were big campaign promises. We already covered one, which was the no tax on Social Security. The others were no tax on tips, no tax on overtime, and the ability to deduct auto loan interest. These provisions are very similar in many ways, including being effective beginning in 2025 and running through 2028. So let's start with no tax on tips. And while that's technically true, as always, the devil's in the details. In this case, the details mean that tip money is still subject to payroll taxes, possibly state taxes, as well as impact a taxpayer's adjusted gross income. Tips have to be cash in jobs that generally get paid tips, so you can't go to your lawyer and say, I'll pay you $10, but I'm going to tip you $1,000. It just won't work that way. And the maximum deduction is $25,000 for all filers, and it starts to phase out when you reach $150,000 in income. And one thing that I think is interesting and is a potential battle down the road is what constitutes cash? Does a tip left on a credit card, does that count as cash, or does it have to be physical currency that's handed over? As silly as that sounds, it very well might be a court battle down the road. No tax on overtime, again, is true, but again with an asterisk. The tax exemption is only for the rate above the normal base pay. So say somebody earns $15 an hour regularly, but if they work overtime, it's $20 an hour. Only that $5 difference is deductible. The deduction is limited to $12,500 for a single filer or $25,000 for a married filing jointly filer, and begins to phase out at $150,000 in income if you're single or $300,000 if you're married filing jointly for your taxes. The overtime must be qualified, but in kind of a break from typical legislation. The definition is fairly common sense. There might be even more caveats for the auto loan interest deduction than for tips and overtime. It may be even combined. So yes, it's technically true, but the vehicle must be for personal use, has to have a gross vehicle weight of less than 14,000 pounds, so you can't have an RV on there. It must be new, not pre-owned, assembled in the US, and the loan must have been taken after 12/31 of 24, so anything starting January 1st of 2025 and beyond. The deduction is capped annually at $10,000 and phases out beginning at $100,000 in income for a single or $200,000 for anyone married filing jointly. Now again, there's a lot more ground I could cover, but I'm just trying to hit the high notes. If you have questions about something that maybe you heard about the tax bill, or how does this work in my situation, again, consult a tax preparer, a tax professional. But if there's any way I can help, I'm happy to do so as well. And any other questions, of course, at any time, please feel free to reach out. Happy to help if I can. Thank you. Have a great day.